All right, so this session is about the ultimate bull case for Bitcoin. Enough of this equivocation. Where's it really going? Beyond the moon, beyond the solar system, beyond the galaxy. It's going all the way. Now, I just wanted to open this up by saying something about the discussion of regulations and the regulators, because when you're talking about where Bitcoin is going, there's that regulatory risk, that regulatory impediment. And here's the deal about regulators. They're all funded with fiat money. The SEC, the CFTC, they're paid in fiat. Bitcoin is obliterating fiat. So there won't be any money for regulators. They're going to go out of business. And if we need a law changed, we can buy a law change. He who has the Bitcoin makes the rules. Am I right? Am I right? The history of finance and industry in this country and around the world is you buy the laws you need to get to where you need to go. All right. So anyway, we got Tuur, Demeester, and Jimmy Song here with the ultimate Bitcoin case. We met briefly before the panel to outline a few points to discuss. So let's get in it, gentlemen. Let's talk. Let me refer to my notes that I've taken extensively. Jimmy Song. It was pointed out this morning by Edward Snowden. He made a comment about privacy. Privacy needed for the bull case. Privacy is absolutely needed. What is your comment on that?
Yeah, I'm not entirely sure that privacy is needed for the ultimate bull case. I think the much more important thing than perfect hiding is perfect binding, meaning that you need to know that there's a fixed supply. If you break the elliptic curve math on Monero or Zcash, there's no way to know that there wasn't more created. And if I were somebody that broke that mathematic, discrete log problem or something like that, that's where I would go because no one would be the wiser. I could just create a shielded transaction that created a bunch more money or whatever. And it's my opinion that privacy isn't nearly as important as the scarcity. And the scarcity is what really gives it the value. And having to trust that the math will stay in that particular, stay secure and stuff, I think is kind of a fool's game. So for me, for the ultimate bull case, we really need to ensure the binding and not the hiding, which is, I think, what Edward Snowden was saying. So in a sense, I disagree with Mr. Snowden on that regard. Privacy is very useful, but the real use case is in making sure that it's secure and scarce. And the scarcity, there's a mathematical theorem that says you can't have both.
Okay, well, I mean, I think what Snowden is also saying that privacy is the ultimate right to fight for if you're trying to, for example, in the U.S. there's the right to assemble, and if we're being surveyed upon constantly, and when there is no safe space to have a private conversation, there's no way to assemble, there's no way to do battle against the forces that you might want to do battle against. And so as a society, it seems like this is a primary right, the right to privacy, which is a fundamental right upon which you would go from there. What is your thought about this, Tuur?
Well, I agree with Jimmy, really, that when it comes to the main chain, auditability really trumps privacy. Like, you want to just be able to verify that what you're dealing with. And then, of course, privacy in general, I think it is a human right and financial privacy. But that doesn't mean that we have to build it directly into Bitcoin's core protocol.
Okay.
Can I comment on that a little bit?
Yeah, jump in.
Yeah, so that there is a right to privacy, right? But there's a bigger right that I think that supersedes it, and that's the right to private property, right? Property rights. That's a much more fundamental right. And when you're talking about Bitcoin, if there can be inflation or something like that, then your property rights are essentially being taken away. In the same way that fiat money, when the central bankers print it, they're taking away some of your property by making your portion of the fiat currency less through inflation. And by having, to ensure that right, you need that perfectly binding aspect of Bitcoin, and that's more important to me than the privacy right.
Right, well, private property would extend to the privacy of my own property, of myself, and my individual sovereignty would be part of my privacy. So I need privacy of my own person. And then be first.
Yeah, they're definitely related. The privacy rights.
I'm not going to
rights.
sacrifice my personal privacy for property privacy or private property. If I have private property at the expense of privacy, I would feel compromised in that way. And but I want to kind of move on because there's a few different points to be made here in terms of the Bitcoin's ultimate bull case and what could be the stumbling blocks there. So let's talk about the Wall Street games, the naked short selling, the ability for Wall Street for years now. As was documented this week in the financial press, Merrill Lynch, which is a subsidiary now of Bank of America, has been involved in a criminal racket to manipulate the price of precious metals. This is something we've talked about for years. Now it's fully documented and in the public domain. How do we stop that from being the fate of Bitcoin? Because you've got Wall Street involved now, the institutions are involved, the futures contracts are involved. Where do we stand on that, Tuur?
Well, I think that there's always going to be some degree of manipulation, because there's the information asymmetry in any market. I do think if you want to manipulate a market in a big way, you need to own the asset to really kind of shake things around. And so far, Bitcoin ownership has been very concentrated in early believers and things like that. People are really invested in it for the long term. So I don't think that's a big problem right now. I think long term, the way to tackle or prevent serious shenanigans is again to make to emphasize auditability and to pursue proof of reserves and things like that, where you can see that if there is a claim on an asset like Bitcoin, that you can, at least to the public, prove that there are no overlapping claims. I think cryptography is probably going to come up with some ways to do that.
Right, overlapping claims, which is how these manipulation schemes work. In the UK, for example, they have what's called infinite rehypothecation. So the same asset can be loaned out an infinite number of times. There's a rule in the US that prevents that from being more than 140% of the asset. But that's why almost every country outsources their financial fraud to the UK. So every major scandal we've seen, whether it's AIG, Lehman Brothers, Bernie Madoff, you can go right down the list, they all have their nexus in the City of London because it is the most favorable regulatory environment for racketeering and fraud. The proof of keys concept, which is Trace Mayer and Caitlin Long, if you pull out the base layer and take delivery of your keys, to me, this seems an effective way to stop the rehypothecation schemes. Jimmy, your thoughts?
Yeah, that's absolutely true. And this is one of the great things about Bitcoin is that it is a bearer asset. You don't have to keep it in a bank, and the burdens of security aren't quite as high as like a bar of gold. I mean, this is how fractional reserve banking started. There was one place where everybody kept their gold, and they would just essentially print more gold through these bills and so on. By being your own bank and making that user experience really good, I think we can make the case that's something that everyone's going to have to get used to. People aren't used to having like a giant bar of gold that's like worth $1 million in their house. This is something that's kind of a shift in mentality, because this used to be a common thing, I think, pre fiat money, where people had to like sort of control their own wealth and stuff like that. We're used to outsourcing all of that, right? Like leaving it at the bank and having some way to get it back. Now we're really getting into an era of personal responsibility where you have to keep your keys and make sure that you know what to do with it. There's certainly like stuff around UX and stuff like that will help. But I mean, everyone I know, when they're having to move their Bitcoin, like they get the cold sweats. It doesn't matter if you're a core dev or somebody that just came in. Like, what if I screw up? What if I do something wrong and I lose all this money? Well, I think part of that is good for you, right? In a sense, because you learn responsibility, and like people are sort of geared to not like that, but that's where like a lot of the fractional reserve and all these games come in, is that well, they're willing to give up control in order to not feel that.
I think another way in which reliability can be improved upon, and is already, is this whole idea that with Bitcoin you can do collaborative custody. So you can basically unbundle. You don't have to trust one third party to hold all your keys. You can have a multi-signature wallet and basically decide to trust different entities in different ways, and that way have much more reliable access to your assets.
Right, I think this latest rally, we've seen a very interesting situation. There was a huge short position of Bitcoin leading up before the rally, and I think as part of the Wall Street reality and realization is that they are exposed to upside moves, that they are unable to play the same kind of games that they've been used to. And then you had this massive rally as Wall Street finally starts to realize that they're dealing with a completely new beast. Let's talk about the Bitcoin dominance, okay? And we're talking about the ultimate bull case for Bitcoin. One way to look at that is to say, okay, to what degree does Bitcoin dominate the coin market cap table? During the height of the altcoin season, it got down to 30%, 33%. We're back at 62, 63%. It started off obviously near 100%. It was hovering around 80% for a long time. That's a good view into dominance of this coin. Where is that going, Tuur?
Yeah, I mean, I've said this pretty consistently since 2013. I think Bitcoin is going to have long-term 80%, 80, 90% market dominance. And that's just because of the network effect of money. Like the more adoption Bitcoin has, the larger the firewall around it, the mining basically to protect it, the more secure solutions there will be, the more fraud detection technologies will exist, et cetera, et cetera. There may be some niches that, investors always want to hedge, so there may be some other assets they want to own that are also in the crypto sphere that could be, in that 10, 20%. But so, yeah, long-term, 80, 90%. Another thing I want to point out is that the current way of measuring the market prominence of a cryptocurrency is market cap, which is basically you take the total supply and you multiply by the price. But that's very easily gameable, right? We can create, max coin and decide that you're selling me 50,000 for $1, but then the total supply is in the trillions. All of a sudden, we have a very large market cap, and we're kind of. But obviously, we're not making a dent into Bitcoin's dominance. So I think that market cap should be adjusted for the real use of a blockchain. I think there's a lot of cryptocurrencies out there that are basically way too dominant, or way too perceived as way too large.
You mentioned Maxcoin. There is a Maxcoin.
Oh, that's true.
Right? And okay, it was launched in 2014 as during a period when there was a lot of experimentation. We had a couple of students came on the show. They launched this coin. It was a project. And it had certain attributes that they was SHA-3 instead of SHA-256 and et cetera. And it had an interesting hashing algorithm. And that was part of a huge wave of these coins. And Bitcoin dominance shrunk. And there was a lot of talk about coins doing different things, and it was an interesting period. But it seems that we're now at a post-altcoin period where all those experiments are being, you know what, you can actually do that on Bitcoin, and that dominance is going to go up, Jimmy.
Yeah, so first of all, the metric I think is very flawed. I mean, you have stuff in there that's like Tether or Paxos coin and like USDC and stuff like that, which is all fully backed stuff. It's not really a cryptocurrency, right? Like that's a representation of the dollar in like digital form. So that should really be taken off. The other thing is that really the liquidity is what matters for this stuff. So I think this is where we need better measurements, because a lot of these coins might have a giant market cap, but it's not really liquid. And as soon as like $1 million worth of it hits the market, it like immediately falls by a significant amount. So there's that aspect. But I think what you said, Max, about alt season sort of like going by the wayside, we're finding that a lot of these altcoins are centralized. They're not really delivering on their promises, especially ICOs. So as we see that, the use case for these things was almost entirely speculation. But as these quote unquote utility tokens show no actual utility, the speculative value is going to essentially go to zero. So the dominance index, I think, goes much higher and goes towards 80, 90% like Tuur said.
Right, there's only so many days you can look at the trends on CoinMarketCap price in Bitcoin and see that everything's red except Bitcoin. After a while, you're like, forget it, I'm going to
Those are the best days, aren't they?
Well, we've had a lot of them in a row now, and I think people are going to be like, the liquidity dries up on these altcoins. It goes into Bitcoin. And so let's jump to a use case for Bitcoin that came to my attention in the last 2 years, and I think it's really fascinating. Talking to the folks at Abra, which is a fantastic app. You can buy and sell stocks from around the world, and it's all collateralized by Bitcoin. So Bitcoin is the operating system of app. It's the base currency. It's a unit of accounts. It's the end game for any currency or money. It's right there today with Abra. And so the demand is collateral. This seems to me a huge potential and driver of price appreciation. I see you nodding your head, Jimmy. Your thoughts?
Yeah, so I think we're seeing a huge sort of market for this sort of thing. We're seeing a lot of lending platforms and stuff, and this is to be expected because we know Bitcoin's a very good store of value. And if it's a good store of value, what are you going to do? Well, you're going to demand it as collateral because you know that's going to store value versus almost anything else. So that seems to be the direction that we're heading in with using it as collateral and loans and so on. I'm not sure exactly how that's going to play out, but we're seeing the real interest rate on some of this stuff because unlike the Fed, which prints a lot of money in order to keep the interest rates low and so on, we're seeing real interest rates like 8, 9, 10, 11% on a lot of these platforms that actually use crypto as the actual collateral.
Yeah, I would add that this really touches on one of the great economic misunderstandings of our time, that the engine of economic growth is not debt, but it's really capital. Like, you got to save first, and then that capital can be invested. And we're seeing that if you use Bitcoin, which is saved value, if you use that as collateral, then people can, the other side of that can be a loan for an entrepreneur, can be an investment, those kind of things. So I think this is kind of illustrating how Bitcoin really is helping economic growth in very particular areas, and I think it's going to be huge. I think Bitcoin also, it's obviously very tax efficient. If you borrow dollars against your Bitcoin, it's much more tax efficient than just selling it and getting hit with that capital gains tax. At least you can defer some of those taxes by having those collateral strategies. So I think it's going to be enormous, the lending market in Bitcoin. Eventually we'll go to Bitcoin bonds, right? We'll get a Bitcoin bond market.
Yeah, makes sense. Especially in a world where negative interest rate bonds. There's now $13 trillion of sovereign debt that's a negative interest rate bond. It's fascinating to me that people say, well, Bitcoin price only moves on speculation, whereas the only reason you would buy a negative interest rate sovereign bond is for speculation, that someone else stupider than you would be buying it at a higher price. That's the very definition of a Ponzi scheme. That's the very definition of speculation, and that's 13 trillion. What if it becomes $65 trillion, which is the world GDP in negative interest rate sovereign debt, right? So this is a trend that is enormously damaging to the economy and would drive interest in Bitcoin. But of course, when you talk about the underlying fundamental base layer of the global economy, whether anyone wants to admit it or not, we are still on a gold standard. Central banks are constantly settling their obligations to each other in gold. Gold runs the global economy. We can say that that's not true, but it is true. So gold is, of course, being a beneficiary of Bitcoin's rise. And this is a statement I've made, and I came to me in a dream recently, that Bitcoin has made hard money fashionable again. and people are like, what else can I buy that's like Bitcoin? They're like, oh, well, gold. Gold's like Bitcoin, it's hard money. Now we see a rally in gold. The gold bugs, of course, have not called any of us up to thank us. I'm waiting for that call from Peter Schiff thanking me for making him so much money in the last month. But I haven't heard from Peter. Peter? No, he's not here. But your thoughts about this? That it's made hard money fashionable again, and gold is benefiting. You want to jump on this? Either of you?
Sure. I think, to me, the macroeconomic big picture is that I think we may be in the early innings of an inflationary period. commodities markets are picking up, oil is rising, stock markets are almost in a parabolic uptrend. So everything is going up, which basically means that the value of the money is eroding. And now gold has broken out of this 6-year holding pattern, broken above 1400. So I really think that, where do you go? Where is it safe? And baby boomers are thinking about this, and the first place for them to go to is gold, and they may diversify into Bitcoin. Millennials, the first place they go to is Bitcoin, and they may diversify into gold. It just plays into the same theme of, the money is being eroded ever since those bailouts started. I mean, obviously with Greenspan, and there's a long. This has been a very long time coming, and also in Europe. I mean, we have global money debasement, and I think that the chickens are maybe coming home to roost.
Right.
Over
I
the
see
next
we've got
5
about
years.
15 seconds left. Should I wrap it up? We're going to overtime, or anybody home? Hello?
Let's just go over time.
Fuck it. We don't need permission. We don't need permission. Fuck them. We're going to 8 o'clock. We're going to 9 o'clock. Cancel your flights. No, we got about a minute left. So.
Okay. Yeah, so at least for me, the big bull case for Bitcoin is not just gold and hard money and stuff like that. A lot of the fiat money, like Tuur's been saying, is not only going to commodities like oil and gold and things like that. It's also been going to the stock market and real estate because people don't want to hold it. So when you think about the ultimate bull case for Bitcoin, I mean, it's possible that a lot of money goes away from those things and into Bitcoin instead, because it's a much more liquid and more uniform store of value. So the bull case for Bitcoin is just almost astronomical, because you have all these stores of value that you don't need to utilize anymore, right? Like your parents bought a house because it was a good store of value, or stocks or whatever. This could replace a lot of that, and the prices of stocks can go more towards like a reasonable PE ratio. Prices of real estate can go more towards like rent versus buy kind of thing.
Right. Spencer Bogart of Blockchain Capital, he's just on this stage talking about roughly 130 trillion in real estate, 9 trillion in gold, right? So that store of value market is many, many, many multiples from where we are today. One last question. I think I can squeeze this in. Can I squeeze it in?
Yeah,
No.
I'm supposed to come out here and
Were you giving us the hook?
heard you off the. But keep going. I don't want to interrupt this.
One last
Come on,
question.
David.
Leave us with something really bullish, maximally bullish thing you can say.
For me, the maximum bullish thing I can say is that the value of fiat currency is going to zero. They're all worthless, right? It's all worthless. This is all bullshit.
You gonna burn it?
Yeah. It's all bullshit. It's all bullshit. It's all bullshit. It's all shit. It's just shit. This is the new cancer. This are new cigarettes. Don't let your kids touch this. They'll get fiat cancer.
I can't top that.
The biggest bullish thing that I can say is the question. I would say that this is the first asset from a private property rights kind of perspective. It's the first one where it's very hard to confiscate, right? If anything physical has a physical location, and that means that you can't be with it all the time, and that means somebody can take it away. This is the first asset which is much more like a belief than anything else, right? Like if you could keep it in your brain, they can't take it away in the same way they can take away your gold.
As long as you preserve your privacy.
Yeah, and as long as you keep it, you could. Much in the same way they can't make you change your belief if you really don't want to, they can't make you give up Bitcoin if they really don't want to. And that's a whole different class of private property that we've never had before. And I think that makes it like way more scarce and valuable than anything physical that's ever existed.
I would add one thing, and I've met several people here who are from Mexico and other countries where monetary volatility is very much an everyday life thing. Like we're here and the dollar has been very stable for a long time, but really for countries like Argentina, Chile, so many countries around the world, money is almost by definition unstable. Every 10, 20 years, there's a financial crisis. Like for those people, the idea of hyper-Bitcoinization, which is Bitcoin-induced demonetization, is not so crazy, right? You know, these are people who, in Venezuela, they love Bitcoin because it's liquid. It's like instantly you can sell it, you can transfer it into something that buys you bread or pay the rent. That's huge. And so, you know, I think the recent rally above 4,000 and then way higher, part of that came from people being scared that the Chinese yuan, for example, was going to drop in value. Maybe people being scared that the money that they have in Hong Kong wouldn't be safe there anymore if they get extradited to China and their assets are frozen. Like these are all things that are real world things that play into Bitcoin, the Bitcoin market. Like we're not in our own little bubble. Like real world global macro events increasingly are interacting with Bitcoin, and it's a huge tailwind for Bitcoin long term, I believe.
Tuur, Demeester, Jimmy Song, round of applause. Woo. Yeah.